Welcome all of you in Rayat Shikshan Sanstha's Project Rose. Myself, Professor Sudhir Chandrakant Bhosle from Karmavir Bhavarao Patil Vidyalay and Shakuntani Parera Junior College, Juchandra. Today, we are going to revise a not-for-profit concern. So, let's start review of accounts of not-for-profit concern. As you know that this is a compulsory topic and question number 6 is asked for 12 marks. Along with that question, some objective are also asked in the examination on this topic. So, this is very important topic for board examination. So, let's start to take a review. As you know that not-for-profit concerns are those concerns which are not started to earn profit, but they are going to give a qualitative services to its member and also society at a nominal charges. So their main objective is to provide social services to promote arts, culture, sports, education, etc. So they are different from profit concern. You know some example like sport club, charitable hospital, school colleges, universities, trade units, chamber of commerce, professional institutions, etc. These are the some examples of non-profit organizations. So in non-profit organization, we have always remember that there are different nature of organization. So as the different organization, they have a different kinds of assets. They also have different kinds of incomes and their expenses are also different. So consider this some organization. First, take example school and colleges. You know that school colleges have benches, furniture, playground, school bus, etc. These are the assets for school and colleges. Whereas admission fees, term fees, tuition fees, government grants, these are the incomes for school colleges. And salaries, repair, stationery, sport expenses, these are the expenses for school or colleges. Now, next one is that hospital. So, hospital is different from school and colleges. Hence, operation equipment, ambulance, these are the assets for hospital. Whereas, visit fees of doctor, patient, lab membership fees of patients, these are the income for hospital. And medicines, salaries to staff, these are the hospital's expenses. Now take one more example, that is a library. Library have a books, furniture, hall, fixed deposit. These are the assets for libraries. Whereas member subscription, entrance fees, these are the incomes for library. And salaries, postage, rent, etc. are the expenses for library. So, like this way, you also you should consider different organizations having a different assets, having a different incomes, and having a different expenses. So, keep in mind. Now, we are going to review receipt and payment account for year ended. As you know that in final account, they are given trial balance. From that, we have prepared final account. Same in not-for-profit concern, receipt and payment account for year ended is given to you. So, receipt and payment account has a two sides. Left hand side, that is debit side, is called as a receipts, whereas right hand side is called as a payment side. So in receipt side, various kind of receipts are given to you consisting of current year, previous year and also for next year. So out of these receipts is of two types. First one is that capital receipt. So first of all, I have explained you what are capital receipts. So capital receipts are those receipts which are non-recurring in nature. See, non-recurring means our organization doesn't get these in receipts for many period or for many times. So they are non-recurring. म्हणजे त्या फक्त काही कालावधीसाठीच होतात. Thereafter, they are not part of a regular income. Means these receipts doesn't become a part of income of our organization. And one more important thing about capital receipts are these receipts creates liability on our organization. Hence, keep in mind these three features of capital receipt. First one, non-recurring. Second one, not a part of regular income and creates liability. For example, bank loan. So bank loan is one kind of liability. Thereafter, uh, various kind of special donation, that is donation received for building वगैरह वगैरह. So these are capital receipts. Thereafter, second types of receipts are revenue receipt. See, revenue receipts are those receipts which are recurring in nature. Means our organization have received many times. Okay, every year we have received these kind of receipts. Second thing is that they are a part of regular income of our organization. Means, as we learned earlier, so there are some receipt like fees, subscription. So they are our regular income, part of our regular income. And third thing is that this receipt does not create liabilities on organization. Hence, these are revenue receipt. Now see the payment side. On payment side, there are different kinds of expenditure given. Expenditure relating to current year, previous year, and also for next year. So, expenditure are also classified in first capital expenditure. So, capital expenditure are those expenditure which are non-recurring in nature. Means our organization have make this kind of expenditure only for certain period of time. Second thing, the benefit of this expenditure is given for organization more than 1 year. For example, suppose we have purchased furniture, then the benefit of furniture is getting for long period of time. Hence, furniture is a capital expenditure. And third thing is that it has creates assets. So all the asset expenditure made on purchase of assets are called as a capital expenditure. Okay. Next one is that revenue expenditure. See, revenue expenditure are those expenditure which are recurring in nature. Means our organization have make this kind of expenditure for many times. Means two, three, four, or more than 2 or 3 times in a year. Then the benefit of this kind of expenditure is received for less than 1 year period. For example, suppose we have make a payment of electricity bill, then the payment of electricity bill gives benefit only for a month. So that is revenue expenditure. And last thing is that it does not create assets. See, आपण इलेक्ट्रिसिटी बिल भरतो, मग त्यामुळे आपल्या काही ॲसेट्स निर्माण होत नाही, किंवा आपण रेंट पेड करतो त्याच्यामुळे आपली काही ॲसेट्स निर्माण होत नाही. सो दे आर रेव्हेन्यू एक्सपेंडिचर. And third kind of expenditure are deferred revenue expenditure. So they are actually revenue, but the benefits of this kind of expenditure is getting for a long period of time. Hence, they are called as a deferred revenue expenditure. Okay, like this way you have remember various kind of receipts. So there are two types of receipt: capital receipts and revenue receipt, and capital expenditure, revenue expenditure. Like this way we have refer, receipt and payment account. Now see the postings from receipt and payment account. As you know that in receipt side there are two kinds of receipts. First one capital and there are second payment side. In receipt side there are two types of receipt: capital receipt. So keep in mind capital receipts are always post to the liability side, and thereafter revenue receipts. Revenue receipts from receipt side are transferred to income side of income and expenditure account. Now see the payment side. There are basically two types of expenditure: capital expenditure. So keep in mind, capital expenditure are always posted to asset side, whereas revenue expenditure are always posted to expenditure side of income and expenditure account. So keep in mind, receipt side, there are two types of receipt: capital receipt and revenue receipt. Capital receipts are also called as liabilities, hence posted to liability side, whereas revenue receipts, they are a part of income, hence posted to income side. And from a payment side, we have make a postings of a capital expenditure to asset side and revenue expenditure to expenditure side. Like this way, we have considered posting from receipt and payment side. Now see, the pro forma of receipt and payment account for year ending is given to you. There are basically two sides. Debit side is called as the receipt side, whereas credit side is called as the payment side. In receipt side, there are various kind of receipts. So revenue receipt and capital receipt. And all these receipts are belongs from current year, previous year and also next year. So one by one we have take a review of receipts. See, receipt side, the starting of receipt side is given from balance brought down, that is a cash balance and also bank balance, as these are opening balance. Opening of current year means these are the closing of previous year, so we does not consider this kind of balance. These have given only when if you have prepared opening balance sheet. Thereafter subscription, you know that subscription means it is a regular income for organization and this is main source of income. So subscription, sometimes subscription is given for previous year, current year and also next year. So we have considered adjustment at that time. Thereafter entrance fee. See, entrance fee is also revenue receipt, so posted to income side. Then admission fee is also revenue receipt. Then lab membership fee, if detail about lab membership is given, then posted according to that detail. If it is revenue, then transfer to income side, and if lab membership fees is given as a capital, then transfer to liability side. Thereafter legacies. See, legacies means these are the property or assets received to our organization by will of particular member. So legacies is our capital receipts, hence transfer to liability side. Thereafter government grants. See, for some organization like school, college, government grant is a regular income. So if it is given revenue, then transfer to income side, and if it is a capital, then post to the liability side. Thereafter donation. See, if donation is general, then this is our income, and if the donation is for a specific purpose like a donation for building fund, prize fund or tournament fund, then all the fund transfer to liability side. Thereafter dividend received. See, dividend received is one kind of income, hence transfer to income side. Thereafter hire or rent of hall. So rent of hall received is our also income. Then sundry income is also posted to income side. Then sale of old material. See, we have make an adjustment on sale of old material. Thereafter sale of old newspaper or scrap. Again, this is the revenue receipt transfer to income side. Miscellaneous receipt, tournament receipt, cricket fees, tuition fees, term fees, collection of fines, locker rent, exam fees, all these are the revenue receipt. Hence, transfer to income side. Okay, like this way we have considered. Thereafter, if balance carried down, that is bank overdraft. If bank overdraft is given at close, then we have transfer to liability side. Now see the payment side. Again, in payment side, there are basically two kinds of expenditure are given. Revenue expenditure, then revenue expenditure is posted to expenditure side. And if there is a capital expenditure, then capital expenditure is posted to asset side. Now see, one by one. Balance brought down. Again, this is opening balance. Do not consider. If opening balance sheet is prepared, then consider as a bank overdraft. Thereafter, by salaries, see salaries for previous year, current year, whatever. We have make an adjustment and transfer to expenditure side. Thereafter, rent, rate, taxes. Again, these are the revenue expenditure. Transfer to expenditure side. Then printing and stationery, general expenses, interest on bank loan, electricity charges, audit fees, tournament expenses, all these are revenue expenditure, hence transfer to expenditure. Keep in mind, student, this is like a profit and loss account. In profit and loss account, the expenses which are debited, they are revenue expenses. So hence same. See, wages is also revenue expenses, hence transfer to expenditure side. Thereafter, purchase of sports material. See, sport material are assets for our organization, hence transfer to asset side. Thereafter, insurance, telephone or mobile expenses, banking, bank charges, postage, convents, expenses for annual function, all these are revenue expenses, hence transfer to expenditure side. Thereafter, fixed deposit. See, fixed deposit are one kind of assets, hence transfer to asset side. Thereafter, purchase of fixed assets. See, fixed assets like a book, furniture, building, investment. These are capital expenditure, hence transfer to asset side. While transferring these balances, we also consider the opening balances of these assets and add this balance, that is a purchase amount, in asset side to the related assets. Thereafter, newspaper, office expenses, repair, etc. These are expenditure, that is revenue expenditure, hence transfer to expenditure side. And finally, a closing balance of cash and banks are given. Then transfer this closing balance to asset side. Like this way, we have make a review of receipt and payment account. Always keep in mind, in receipt side there are two kinds of receipts: capital receipts and revenue receipts. Revenue receipts are transferred to income side, whereas capital receipts are transferred to liability side. In payment side, there are basically two kinds of payments, that is expenses. So capital expenditure are transferred to asset side, whereas revenue expenditure are transferred to expenditure side. Like this way, we have make a postings from receipt and payment account to either income and expenditure account or balance sheet at closing of the year. So in next lecture, we have going to learn adjustments relating to not-for-profit organization. For this lecture, we have continue here. So always remember all these postings and consider for the adjustment. Thank you.